Joining us today on the Trading Bell is Ezekiel Award, the Managing Director for CIC Life Assurance Limited. We're going to be talking about the insurance industry, of course, within Kenya, the pension schemes as well, and more. But first, let's take a look at his profile. Ezekiel Awar is the Managing Director of CIC Life Assurance Limited. He holds an MBA in Strategic Business Management from Strathmore Business School and has a degree in Arts, Government and Public Administration from Moore University. He is a qualified member of the Chartered Institute of Marketing UK, Retail Banking Academy UK, Marketing Society of Kenya, and holds a certificate of proficiency in insurance from the College of Insurance. Ezekiel is also a member of the Institute of Directors of Kenya and serves in the boards of CIC Africa Uganda and Kenya Rugby Union. He has previously served in the boards and committees of Lenana School, Liban Society, Parklands Sports Club, Carrot Country Club and Muthaiga Golf Club. Ezekiel has over 16 years experience in the financial services industry, mainly banking and insurance. He joined CIC Group in 2015. Welcome, Ezekiel.
Thank you very much for hosting me.
All right, glad to have you. Now, let's just jump right into it, because we do know that a fraction of the formal sector workers are covered by pension schemes, less than 50%, and less than 10% of working Kenyans. So can we just start off by you giving us a bit of an overview of where the pension industry stands in Kenya as for what you think?
By way of definition, pension is a way of savings for retirement.
Yes.
The pension industry is regulated by the Pension Act, by the RBA Act, Cap 197. This act came into being in the year 2000, and it is what regulates the industry, operations of pension providers, and so forth. Pension is largely provided as a product by the insurance companies. We also have government-provided insurance pension products. And we also have occupational, pension schemes that are offered by various institutions on behalf of for the employees. Rather.
Yes.
Yeah.
So when you talk about the pension products that CIC Life Assurance offers, how is the uptake, and what kind of specific products do you then offer?
Under pensions, we've got three products. We have an occupational scheme which is offered by the employers. This is a product where employers take on behalf of their employees as a benefit. Secondly, we also have an individual pension plan that those in the informal sector, SME, could take on their behalf to plan for their retirement. And lastly, we also have an annuity plan, which is basically purchasing an income for yourself once you retire.
Okay, all right. And when you speak about corporates taking out this pension scheme for their employees, is that usually something that majority of them tend to do?
Yes, it's a benefit too, given to most employees, and it goes to demonstrate that an employer is indeed, a caring, employer, helps with retention of employees also in the long run, in the long run. And yes, most employers do take up pension plans for the employees. Okay, so if budget does allow.
Yes. So when we talk about the pension system, there have been some who have the opinion that it should be expanded to accommodate other saving objectives like financing home ownership, children's education as well. Do you think that's something that should be catered for?
Yes, it is. Currently, one can use part of their pension benefits to take up, a mortgage within the financial services industry, banks, and other, mortgage service providers. And I think it's a prudent idea for government to allow the use of pension benefits for the uptake of mortgages among other benefits.
Okay, and most Kenyans do have this tendency to access part of their pension savings before they even retire. So what effect does this have then on their earnings and when they finally retire to the general economy?
I wouldn't advise one to access their pension, savings when they leave an employer, although that is a trend that we've seen happening a lot in the industry. Yeah. What that does is it reduces the amount that one will get at retirement.
Yes.
Therefore, interfering with the retirement philosophy that one has got and all the plans. It's important to note that the amount of funds and money that you require when you retire is much higher than what you're currently living on. As an example, if one is living on 200,000 shillings a month, at retirement, that could be about 500,000 shillings required on a monthly basis. Furthermore, different issues come up when people retire, mostly relating to health. Therefore, I would, in fact, encourage people to save more on a monthly basis in addition to what the employers are saving, so that they can have a proper retirement.
So when they do retire, of course, they're going to need a lot more than you need in the short term. So it's more prudent to keep that going.
Yes. And your investments should be gaining you sufficient capital to enable you to retire properly.
Okay, great. But now that we widen the scope and we talk about the insurance penetration in general within the country, some of the target groups that are left out seem to be the informal sector, the youth as well. And what do you think should be done to promote these groups specifically to uptake insurance? Because they tend to not want to, of course, do that as much as insurance companies would like.
Yeah, I think the thing is the value proposition that we do offer to to that segment of the population, the youth and those in the informal sector. A lot of them do not see the need or the benefit to have an insurance policy or even a pension plan.
Yes.
Secondly, a lot of the insurance companies again need to share and highlight the benefits of these products out there, create more awareness within that segment of the the population. They also need to look at the value proposition of the products and to make sure that these products are indeed meeting the needs of that segment of the population. The cost of these products notwithstanding.
Yeah, so when you talk about cost, of course, when you have somebody from the informal sector, you have a trade in Gikomba market, for instance, of course, they're not going to just willingly think that, yes, I should have insurance. In terms of CIC, what is the minimum that they can actually pay per month in order to be covered?
The minimum at CIC is 500 shillings. And we are the largest microinsurance company in Africa. And that is mainly attributed to the microinsurance products that we have, both in the line of insurance and pension plans as well. And most other players do have a minimum premium that people must pay. And this premium, more often than not, is beyond the reach of most Kenyans, and therefore contributing to the low levels of insurance penetration that we have in the country.
Okay. All right. Now let's go even further out, because I know, of course, you have operations in Uganda, Malawi, South Sudan as well. How would these places differ in terms of Kenya for insurance penetration rates?
I'll tell you that in the region, Kenya still has the highest level of penetration at about 2.7 percent. In Uganda, it's less than 1%. In South Sudan, less than 0.5%. Malawi, it's even worse. So in the region, Kenya is doing well, but not as compared to other countries like South Africa, Namibia, or Botswana, where the uptake is extremely low. We are not happy with the levels of penetration, and as an industry, there's a lot more that we must do in terms of looking at the various lines of insurance products that we do offer, the distribution capacity. We need to look at technology and etc., and look at the pricing of our products as well. And lastly, we also need to look at ensuring that the insurance industry has got the right levels of confidence and sentiments among the population.
Okay, so that was a bit of a regional outlook. But as we come back to Kenya and we talk about, once again, the pension schemes and pension-related products that you do offer, do you think that, after you retire, that when you've already divested everything and you're ready to then take back that back seat and just stay on this particular scheme, do you think there's enough provision of funds for that to be made comfortably possible? I
think we have the relevant products that can meet one's expectations when they retire. What's most important is the amount of money that one puts aside for that retirement day, because the more you put, the more you will enjoy your retirement. Unfortunately, for most Kenyans, they try to put the minimum 2,000 shillings, 1,000 shillings, or even 500 shillings. That would not really enable you to have that nice retirement plan that one would aspire to have.
Okay, so aside from the retirement, when you talk about other insurance uptake, when you talk about medical insurance, for instance, how do you think the medical insurance uptake is in the country right now? Do you think that the rates are inclusive to all classes of earning?
Medical insurance uptake is growing. I think it's the fastest growing right now in the the industry because a lot of people are realizing the need to have a medical insurance cover because of the cost of Medicare is definitely on an upward trend. Unfortunately, I think the premiums are still too high for the reach of most Kenyans, and Medicare is generally expensive, and therefore the cost and the premiums that we charge on this particular product is as efficient as it could be here.
Okay.
It's higher.
Well, you've got like 10,000 Kenyans who go abroad for treatment every year. So then when you speak of insurance, of course, being a more costly, product simply because in terms of medical insurance, because of the fact that the expense is so high, even in the country, then do you see a lot of the people who take up this medical insurance simply do it because they would like to seek treatment outside?
I think the Medicare ecosystem in Kenya is not as sufficient. We have very few hospitals that would offer certain kinds of treatment. And if you look at the supply versus demand, factors in the medical sector, then the demand exceeds, the supply of these, facilities. And that is what is driving most Kenyans, to go abroad. I don't think that treatment abroad is what drives most Kenyans to take up a medical insurance cover. It is a necessity that one must really have.
Okay, well, when we talk about some of the greatest issues that Kenyans face in terms of medical coverage, it's to do with issues of cancer, it's to do with kidney transplants. Here's some of the major reasons that Kenyans do go abroad in order to gain treatment, as you said, because of the facilities that perhaps we have here. But although they are expanding, but when we talk about medical tourism, we have seen that Kenya in the region has also picked up. We've got a lot of people coming in from outside simply to access medical care here. There's a bit of irony in that situation. But when we talk of insurance covering those sort of factors as well, then where do we stand?
I think Kenya is truly a blessed country. We have all the necessary expertise in the medical field, as as we could need, from neurosurgeons to plastic surgeons and all the others that are available in the in the country. And therefore, and within the region, I think we have the most developed hospitals, and that's why we see an influx of people coming in from the other countries to to sample some of our medical facilities that we have in the country. From where I sit, we need to look at both internal and external factors within the insurance industry, and more so within the underwriters and the other players. Internally, I think most insurance companies need to look at their capabilities and build on these capabilities to enhance growth and their performance, from technology, investing in technology, from human resources, ensuring that you have the best talent, build capacity of your employees to enable them distribute and offer your services appropriately. There's also need for marketing and creation of awareness of the benefits of insurance. And there's also need to conduct research and come up with products that would meet the ever-changing needs of the Kenyan population. Externally, I think regulation will also be key. Just looking at what sort of regulation do we have. Does it stifle the growth of the sector, or does it increase growth and penetration? Does it encourage innovation, for instance? Does it encourage different levels of distribution using technology and so forth? Do we have social media as a channel of distribution? Can that be allowed?